All right, welcome back, everyone. I'm going to get right into the stock market analysis. We're going to go through some sectors, individual trade ideas. Again, we're using the charts and really just the technicals. So that's what I'm pointing out, looking for trade ideas and anticipating where the market's heading next. If you guys are finding value in the content, drop me a thumbs up. And if you're interested in additional market insights, additional videos, I put out one this morning. Check out the private member group. $5 a month. You can cancel anytime. The commitment, your minimum commitment is going to cost you $5. So check it out. Link in the description below. All right, let's get into it. Sectors. All right, I'm going across my sectors watch list that I have, and I just want to point this out. All right, we are seeing basically the fact that pretty much every sector is down quite a bit except for one. So you can see here IYR, this is real estate. Interest rates continue to climb. This thing's down from the highs 11%. Consumer staples from the highs, this thing's down about 7%. Utilities, this thing is down 7.5%. Retail, this one from the highs is down about almost 6%. Consumer discretionary from the highs, this one is down about 6 or 7%. Healthcare from the highs, this one's down quite a bit, 11% or so. Industrials from the highs, this one is down 8%. Financials, this one from the highs is down 5%. Energy from the highs, this one is down. This one's been rallying a little bit, but it's down as of right now 8.5%. Home builders, obviously very interest rate sensitive, is down 17%. And you have small caps from the highs down 8.5%. So you can see everything's basically down from the highs except the one sector, XLK, which is your technical stocks. It's your Mag 7. It's basically a handful of large cap tech stocks. And this one is, basically kind of at the all-time highs. I mean, it's down today, but only 2%. Yesterday, it was pretty much knocking on the all-time highs. So there's a guise of strength that's going on because these are so heavily weighted. They can drag the S&P 500 up. These stocks are indexed all over the place. They can drag the market around, but you can see there's selling going across in other sectors. All right, there is selling happening in the broad stock market essentially, and it's only being masked by about 5 stocks. So the key being that if or when you see continued weakness in this sector, then you're either going to want to look for rotation into the other stocks, because that can sometimes happen. You'll see money moving out of the large cap tech and moving into all the other sectors, or you're going to see a broad-based sell-off, because the only strength in the market is coming down to these large cap tech stocks. So that's that. Let's go to the triple Qs. Again, the bigger picture that I see is bearish rising wedge. All right, you've got a breakdown. You're getting rejected on these breakdowns. The bearish rising wedge has been broken, and the projected target sends us down to about 478. All right, that's the projected target. It's the widest part of the wedge. You take the widest part, take it at the point of the breakdown, which you could say it's right there basically, but I like 478, the 200-day moving average. That's where the bull should be putting up a fight. All right, so I do believe we have some more downside in triple Qs. NVIDIA is the main culprit here in terms of, I think, the strength in the tech sector. And you can see here, I believe that strength is coming to an end, because NVIDIA, when I mark it out on my chart, you've got a uptrend here on NVIDIA, and that trend has been broken. You can see there's your uptrend. There is the definitive sell signal right there. Came back in mid-December, and yesterday we had a definitive back test of that trend line. In the private member group, I posted saying this is an objective short right here on NVIDIA because we're back testing, and today we're seeing strong selling. So that was a good trade so far, and I do believe we are heading lower down to the 200. NVIDIA hasn't touched the 200-day moving average for, basically since January of 2023. So a move down to the 200, I think, is very likely. And you should see the bulls try to hold that 200 down there. Okay, a couple trade ideas. I've given many in the private member group. I'll just throw a couple out here. BLK, you have a sell signal on this one on the daily chart. So you can see the uptrend line, nice clean support. We've got negative divergence indicating that we're going to see a trend reversal. And we need a sell signal, which would become in the form of a break of trend line support. And there it is right there. So unless they can rally this thing up and recover it by the end of the day, this is a definitive sell signal. And we should head down to the next level of support, which is 964.57. All right, I've got that. That likely maybe a short term, might hold there for a week or so. And then ultimately, I think you head down to the 200-day. And then that's where the bulls will likely try to hold this as a support. Now, it doesn't mean that they're going to be successful, but I think they'll mount a defense down there at the 200. Could see a rally back up to resistance. So that's the trade idea on that one. Interest rates. I don't think I've covered this yet in this video. I know I went through it in the private member video, but in general, you've got the 10-year treasury yield continues to rise. And there it is right there. TNX, this is your 10-year, your interest rates. Consumer debt is pretty much, they use the 10-year to mark the rates for consumer debt. So mortgages, credit cards, auto loans, things like that. And the economy is 2/3 consumer spending. So higher rates, lower spending. This is, kind of how it adds up. And we've got rates approaching the former kind of this reaction high right here, about 473. You should start to see the markets start to react, and they are essentially, but you should start to see them kind of freak out about higher rates, and then the media will kind of pile on with the narrative. And as rates continue to go higher, the biggest thing is, when you look at the weekly chart, now this is big picture macro stuff, but it should be kind of the underlying theme behind the technicals. And when you look here, I have to go all the way on the weekly chart. This is 1981, okay? So you're going back 50 years essentially. And you've got falling interest rates. So the baby boomer generation, really for their entire, most baby boomers were in their teens, maybe 20s back in 81. And they were, or maybe 30s, but essentially they were just starting out, and most likely just starting out with investing. So their entire investing life, they've experienced falling interest rates. You've seen home prices rise. You've seen stocks in general rise for their entire life. And so that has created the time in the market beats timing in the market narrative, because in general, that's been true for the last 50 years. There's been a rising tide, and primarily that's due to falling interest rates. Now, these little breakdowns of this channel, this is the Fed during the great financial crisis. You got QE1, QE2, Operation Twist, whatever they called it. This is Fed intervention when they artificially brought the rates low, and then this is COVID. So this is the Fed basically doing everything they can to manipulate the market, but now the market's really starting to push back and say, okay, rates are rising because this channel's been broken, and you can see we are in a rising interest rate environment. All right, we've been flatlining a little bit, but the rates are holding up. All right, and if we're going to spike, and especially if we spike these most recent highs, the market should start to freak out, and then you'll see maybe money move out of stocks and into some bonds, and the rates pull back. But rising interest rates is where we're at. We're in a new paradigm. This is not the last 50 years. This is a new kind of market, and it's right there in front of your face in the interest rates. So something like Tesla, which ultimately is a car company, car company backed by a bunch of momentum and hype. That's essentially what they do. They use speculative money and momentum to push this thing higher. And then you see the CEO kind of float out headlines and things like that at key times trying to push it higher, but it's basically hype. But the products that they sell are cars, okay? And those products typically are being financed, which means that you're going to have interest rates that are going to be very impactful to something like Tesla. So on Tesla, we spiked up, made a new high. It is a divergent high, essentially. You can see here, here's your former high, and here's your new high. And you still have negative divergence. It's still there on the RSI. Not so much on the PPO, but it is on the RSI. So what I've got is, and this is a weekly chart, but you've got a downtrend line here. I think we come in for a back test of that trend line right down there. All right. Dual support right down there. You can see I've got this trend line here kind of moving up, and you have that downtrend line. So I like that as a target for right now. That would be a drop from where we're at of about 30% in Tesla for a back test. Moderna is the COVID vaccine seeing a little bit of a buy signal today. You can see here you've got resistance here, and we had a breakout a couple days ago. So yeah, that's kind of interesting. I'm not sure if there's going to be a headline strapped to this. If this continues to rise, why is this Moderna rising? So something to keep an eye on. It is, again, that's a buy signal, so take it if you want. Okay, and a long trade idea, not actionable really quite yet, but I still like it. We're looking at a weekly chart. This is Mosaic. It is a ag input stock, and you've got basically a bullish falling wedge on the weekly with bullish divergence. No definitive breakout or buy signal, so we do need to see this wedge get broken out of to trigger a buy signal. And if you do that, then this thing can run. The widest part of the wedge that I have right now is here, which means if you break out soon, it's going to send us up to about 41.85. I like that as the target. We just don't have that buy signal yet, so we have to kind of wait for that. But if we get it soon, you can see this was former support right through there, and then it was resistance. So it's a nice target, and it is the major part of that wedge. So that's a long trade setup. Not actionable yet, but definitely a setup. All right, I'm going to wrap it up here. Drop me a thumbs up on your way out, and I will catch you on the next one.